As of 10:05 a.m. GMT-5 on January 13, 2026, Rezolve AI PLC is trading at $3.61 USD, representing a sharp intraday drop of 40 cents or 10.04%. For many retail traders glancing at their Robinhood app this morning, a double-digit percentage decline usually triggers a sense of panic or a rush to the exits. The immediate expectation is that the hype surrounding the Agentic commerce sector has finally hit a wall, especially following the company's recent high-profile demonstrations at NRF 2026 in New York. However, the reality beneath this morning's price action is far more strategic. This 10% pullback is happening on the very same day the company is hosting a critical analyst and investor call to provide updated revenue guidance for 2026. What we are likely seeing is a classic sell the news event or a temporary shakeout of weak hands before the management reveals their projections for a $500 million annual recurring revenue exit rate. If you are using interactive brokers trading or managing an individual brokerage account, this volatility is the price of admission for a stock that has climbed over 270% from its 52-week lows. The immediate insight that is catching the smart money's attention and creating a curiosity loop for the rest of us is the massive disconnect between Rezolve's current market cap and its contracted revenue. Most investors see a $3.61 stock and assume they are looking at a speculative microcap with more dreams than dollars. The reality is that Rezolve AI has already disclosed over $209 million in contracted revenue for 2026, a figure that significantly exceeds the current analyst consensus. While high-flying names like Nvidia stock or Apple stock are valued on their dominant hardware or ecosystem, Rezolve is building a bridge between conversational AI and actual retail transactions. This morning's sell-off might feel like a defeat, but for those who understand the SQD revenue model backed by titans like Deutsche Telekom, the reality of the business's scaling power is starting to outweigh the expectation of its failure. Looking at the daily swings, the stock opened today at $4.20, briefly touching the $4.21 mark before the selling pressure intensified. The trading volume has been massive, already crossing the 17 million share mark in the first hour of trading, which is a significant portion of its average daily volume. This tells us that there is a high-conviction battle occurring at these levels. If you are using SoFi Invest or checking your portfolio through the Fidelity mobile app, you've probably noticed that Rezolve has been one of the most volatile yet trend-heavy stocks in the AI commerce space over the last month. The fact that it is currently trading below its 200-day moving average of $3.75 is giving technical traders pause. But the reality check is the 14-day RSI, which had been creeping into overbought territory during the recent run-up to $4. Today's drop is essentially a healthy cooling-off period for a stock that had moved too far, too fast. Let's establish some common ground. The general belief among many retail investors, especially those using the Robinhood app or starting out with online investing, is that AI stocks are either trillion-dollar winners or $0 losers. The expectation is that Rezolve must compete with the likes of Google or Microsoft to survive. However, the contrarian take is that Rezolve isn't competing with them, they are partnering with them. Their recent live demonstration with Microsoft at the National Retail Federation's Big Show proved that Rezolve's Brain Suite is designed to sit on top of existing cloud infrastructure to turn browsing into buying. If you are managing your own self-investing through a Fidelity brokerage or an interactive broker's account, you need to understand that Rezolve's Agentic commerce is about solving the $4 trillion problem of abandoned digital shopping carts. They aren't just making a chatbot, they are creating an autonomous shopping agent. To give you a clearer picture of what this company actually does, Rezolve AI specializes in mobile commerce and customer engagement. Their core product, the Brain Suite, uses artificial intelligence to allow consumers to engage with brands through visual search, audio recognition, and conversational interfaces. Imagine seeing a pair of shoes in a magazine or a video, snapping a picture, and having an AI agent handle the entire transaction, from finding your size to processing the payment and arranging delivery, without you ever having to navigate a website. That is the reality they are building. Their business model is shifting towards a high-margin, recurring revenue structure through their SQD model, which provides them with predictable cash flows, which is exactly what institutional wealth management firms look for when they use the interactive brokers platform to build positions. Comment below how many shares of Rezolve AI you currently hold, or if you are waiting for the stock to settle below $3 before you consider an entry. The history of Rezolve is one of intense research and development, followed by a rapid commercialization phase. Only after years of perfecting their proprietary algorithms did they begin the aggressive expansion we've seen in late 2025 and early 2026. Older reports showed significant losses, as is common for high-growth tech firms, but the December 2025 revenue figures, which surpassed $17 million, suggest that the inflection point has finally been reached. For those using investment help or looking through online investing sites, it's important to note that the company has attracted talent from Apple, Google, and SAP. This brain drain from the giants into a smaller firm is usually a strong signal that the technology is legit. When you see executives leaving a trillion-dollar company to join a sub-$5 stock, you have to ask yourself what they know that the rest of the market doesn't. Macroeconomic pressures are also playing a role in today's 10.04% decline. As interest rates remain a concern for growth-oriented technology stocks, investors are quick to take profits at the first sign of a broader market dip. The expectation is that small-cap AI firms will be the first to suffer in a risk-off environment. However, the reality is that companies with contracted recurring revenue like Rezolve are much more resilient than the speculative pre-revenue firms that flooded the market in the last couple of years. If you are using a SoFi trading platform or exploring Fidelity mutual funds that have exposure to the AI sector, you'll see a growing trend of quality over quantity. Investors are no longer just buying anything with AI in the name. They are buying the companies that can prove they have a path to $500 million in ARR. When you look at institutional activity, it's fascinating to see the divergence. While retail traders might be panicking on the Robinhood app today, institutional ownership has been quietly climbing, now sitting at around 24%. Major players are starting to see the intrinsic value, which some analysts using discounted cash flow models place as high as $8.83 per share. This gap between the current $3.61 price and the $8 plus fair value is the primary driver of the strong buy rating you'll see on most investing sites. Whether you are using the interactive brokers trading platform or a SoFi active investing account, the key is to determine if you believe the company can execute on their 2026 guidance. If they hit that $500 million exit rate, the current valuation will look like an absolute steal in retrospect. The future outlook for Rezolve depends heavily on the integration of their agentic commerce into global telecommunications networks. Their partnership with Deutsche Telekom is the reality that proves their scalability. By embedding their tech into the devices and services of a major telco, they gain instant access to millions of users without the high cost of individual customer acquisition. The expectation is that growth will be slow and linear. The reality is that these enterprise partnerships can lead to exponential hockey stick growth. As we move into the second half of 2026, the market will be looking for proof that these deployments are translating into actual transaction volume and not just pilot program noise. If you are a self-directed investor using the interactive brokers platform or the SoFi Invest app, the technical levels to watch are $3.25 on the downside and $4.14 on the upside. A break below $3.25 could signal a deeper retracement towards the $2.80 support zone, while a recovery back above $4.40 would confirm that today's drop was just a temporary consolidation. The volatility we see in RZLV is much higher than what you would find in an index fund or even in a mid-cap tech name like SoFi itself. But for those who understand the risk-to-reward ratio of the Agentic AI sector, this is where the most significant moves are happening. The contrast between the expectation of a small-cap struggle and the reality of their enterprise-level success is the story of the year for Rezolve. In summary, Rezolve AI at $3.61 is a company that is currently a victim of its own recent success. Today's 10.04% drop is a painful but predictable reaction to a period of massive gains and high-profile marketing at the NRF show. The expectation that the company is all talk is being systematically dismantled by the reality of $209 million in contracted revenue and partnerships with global giants. Whether you are managing an individual brokerage account, using Robinhood investments, or trading on the Interactive Brokers platform, the key is to determine if you believe the company can execute on their 2026 guidance. If they hit that $500 million exit rate, the current valuation will look like an absolute steal in retrospect. Would you like me to analyze the specific details of the Deutsche Telekom revenue share agreement or provide a